View that the recovery in China is still not on solid footing. How will the trade data and inflation data reinforce that view?
Well, and we are also of the view that the growth likely has already bottomed in Q3, and we are looking for GDP growth to recover to around 7.8% in Q4 from the 7.4% in the last quarter. But that being said, if you look at the latest PMI data and the new export orders actually has been hovering around 50. And while the new orders has remained at 51.2. So this suggests to us that, well, on one hand, the domestic demand has held up and helped to offset the external weakness, but also the external uncertainties will likely continue to weigh on Chinese growth recovery in 2013. So for the data release on the trade data, we are looking for exports growth to be at around 5%. So slight recovery from the downside surprise we're seeing in November. I think it's 2.9%. And that being said, for the 2013, we are looking for export growth to be at around 8% for the full year. So unlikely to see a significant pickup from the single-digit growth, given the overall global economic situation.
No real significant improvement on exports for China. What implications will this have on monetary policy, considering that inflation may also be an issue in the later part of the year?
Right, for inflation for December, we are looking for the CPI inflation to rise further to 2.4%. And partly driven by food prices, because the cold weather has pushed up vegetable price, and also the holiday demand has led to a continued increase in the pork price. And also for next year, we are looking for inflation to rise further to 3.2% for the full year, up from 2.7% in 2012. So this means that monetary policy will continue to balance between the possible some downside risk to growth and also possible some upside risk to inflation, as well as elevated property price, which is also a factor that affecting the PBOC's policy decision. So therefore, we expect monetary policy to remain prudent, or say a neutral stance. We are not looking for any policy rate cuts, and further easing looks less likely. On the other hand, our base case does not look for a policy rate increase unless the growth and inflation came in at stronger than our current expectation.